This past week, a lot happened, perhaps the beginning of a new trend. One sector is showing signs of life for the first time in maybe years, while another is really starting to falter. We're going to recap everything in just a few minutes. This week's economic calendar was jam packed. Starting out on Monday, Empire Manufacturing, 2 year lows. We're talking about the Empire State Manufacturing Index, now at a level of negative 20. That's the biggest drop in quite a while. Also, the lowest lows in about 2 years. Not good for manufacturing in the state of New York. Next on the list, retail sales. Grocery store sales surged. Overall, retail sales rose at an annual rate of 3.4%. That's a second month of decline. But within that figure, grocery stores, that's up 4.3%. That's the best rate in a long time. Also, food and beverage sales, 3.9% on a year-over-year basis. Another winning streak. Very good for food and beverage sales. Next on the list, housing starts. This was good. Builders are getting back to work. We're talking about housing starts, which marks the beginning of a housing project, the construction. That's 1.5 million. That's the best level we've seen, well, in the past month or so, but the second best in years. Now, contrary to that, it was also reported building permits. That's the permission to build a new home. New projects decline. This is the first stage, by the way. The building permits occurs before the housing starts. Building permits at 1.45 million. That is the third month of decline. So the permits are declining, meaning the permission to build new homes is declining. The housing starts, the next stage, that's increasing. How do we explain the dichotomy? We spoke about it this week. Essentially, the builders are trying to make up for a very cold winter, but there's not a lot of demand behind that. Immediately, the number looks good. Long-term prospects, not so much. Here we can see, in blue, building permits trending lower, housing starts trending higher. Again, in the immediate future, we expect a bump in construction, but the long-term prospects don't look good. Also reported this past week, industrial production. This is manufacturing index. New record highs. This was a really good number, coming at a level of 104.2. That is a really big surge even from last month's 103.4. This is good news. Manufacturing looks like it's on the mend. February industrial production jumps on the factory output. There is optimism in the manufacturing sector. In other news of manufacturing, capacity utilization. That's at 8-month highs. This shows the capacity of which manufacturers in general are using their capabilities. That's at a level of 78. That is the best number we've seen going back to June of last year. This is very good indeed. It certainly is an uptrend. Next on our list, Fed decision. This was last Wednesday. The Federal Reserve met and they said a few different things. They changed their economic outlook. This includes the risk of rising inflation. Here are the Fed expectations. Slower growth and soft employment is a reality perhaps we're going to have to talk about in the future. They revised their growth projections down. That's not good. However, they also state that they're leaving the door open to possible higher inflation. The combination of the two is really not a good thing. Now, when we talk about inflation, we talk about possible higher prices for things like food, fuel, real estate, but also stocks. And that could be good news. There's a strong market correlation. When the Federal Reserve is expected not to cut rates, that's actually good for stocks. We have a chart that shows exactly this. In yellow, S&P 500. This goes back over the past month or so. In blue, those are the bars that show the probability, the chance that the Federal Reserve will not change interest rates. They won't cut interest rates in the June meeting. And we can see over the past couple weeks, as stocks have been weak, well, the expectation was the Fed will cut rates. The probability of no change was declining. But more recently, stocks have started to recover, along with a probability that the Fed will not cut rates. The perception is the economy doesn't look that bad, so the Fed should not cut rates. Oh, and by the way, the expectation perhaps of higher inflation, that's another reason why the Fed doesn't want to cut rates. Both situations bode well for stocks. Also reported this past week, the Philly Fed, another manufacturing number, moderate growth. It wasn't great, but it was good at a level of 12. That's down from last month's 18, but still positive. And in fact, this is the third positive figure in a row. That's good signs, especially comparing this to the Empire State Manufacturing Index. In fact, take a look at both together. In blue, Empire. In red, Philly Fed. And we can see over time, there seems to be quite the divergence. The Philly Fed seems to outperform the Empire State Manufacturing Index. There are several reasons why. We're not going to tackle it here because it gets kind of in depth, but this is something we definitely have to talk about because it means the difference between one subsector within manufacturing or another. Next on our list, we also reported last week existing home sales. Small improvements, not terrific, but there is some improvement. Overall, existing home sales, the median sales price, it rose to 398,000. That's better than last month's 393, but we can see there's a long-term trend to the downside. We would really like to see that level break back above 400,000. So far, it can't. Also, existing homes, this is the volume of sales, 4.26 million. That's better than last month, but so far failing to overcome December's highs. So again, it's not great, but it's good. In terms of the monthly supply, this is the amount of homes on the market for sale. We stay at the last month's rate of 3.5. 3.5 months at the current pace of sales to work off all the inventory. This is a low number. We talk about new home sales is much higher, but the existing homes is lower because those current homeowners, they don't want to sell because if they sell one house, they might buy another and they're going to wrap themselves into a new, very high interest rate mortgage. It's called the lock-in effect. So the homeowners, they don't want to sell. That's why there's, relatively speaking, little inventory. So it's wrapping this up all together. What can we make from all this? I know it really is a lot. Here's my take. First of all, in terms of manufacturing, for the most part, it's actually good. And for those of you that have been following this for a while, manufacturing has been awful. Industrial production, new record highs, capacity utilization. They're using more factory components and really their capability than in a long time. The Philly Fed also looks good. Empire does not, but the Empire Manufacturing Index is more susceptible to overseas risks. The Philly Fed, it's more domestic. So as far as domestic growth in manufacturing, it looks good, and that is reason to celebrate. In terms of housing, well, it's not bad. It's not really good either. The housing starts, like we mentioned, builders are getting back to work, but they're just trying to make up for lost time after a deep winter freeze. But behind that, building permits are declining. There's not a lot of demand over the long term. Existing home sales, there's small improvements, but still the average sales price is below 400,000. The inventory is still very low. There's not a lot of reason to celebrate. But really the big theme of last week was inflation. First of all, retail sales. Lots of inflation we see in the grocery store sales. Not good for us as a consumer, but good for the grocery stores, good for food and beverage producers, things of that nature. But also, the Fed has told us, be aware, we may see higher inflation in the future, and that's not good. Well, that's not good for us as a consumer, but as a stock owner, that is a good thing. As the investor, that is a good thing because inflation tends to correlate with rising stock prices. Next week's economic calendar has even more. In particular, there's a lot, but the big numbers, S&P Case-Shiller Home Price Index, new home sales. On Wednesday, durable goods, that'll be big. Thursday, GDP, advanced retail inventories, and pending home sales. And Friday, the PCE, the Personal Consumption Index, the Fed's favorite measure of inflation. Certainly a lot to watch next week. We hope this has been helpful. We look forward to seeing you back soon.